All right, today with me, the great Earl of Reverse Mortgages. Mr. Earl, how are you, buddy?
Morning, Mark. How are you?
Good. Hey, question. You said you were just what were you just doing? You said you came back from somewhere. What were you doing?
So I was doing a speaking engagement for the retirees of the International Brotherhood of Locomotive Engineers.
I'll be darned. The Locomotive Engineer Brotherhood.
Yes,
What
sir.
was what was the
The
topic?
Teamsters.
I'm guessing, we have not talked about this, but I'm guessing this is relevant for today. What was the big takeaway? What was the point we were trying to drive home today?
Well, they have their own pension and benefit system at the railroads, so across the country. So I was just showing them how equity to offset some of their expenses on a monthly basis, and it was very well received.
That's awesome. And they do that through reverse mortgages, I assume, right? That's part of what you were pitching because I know we've lovingly given you the title of Earl of the Reverse Mortgages.
The
Um,
Earl of Reverse Mortgages. Yes.
so give me an example, a real life example of somebody there that maybe you've helped or how you got in the door. Because obviously, somebody has to know you to go do the speech. So what was the example that you had? And again, not giving away any personal information, but what example do you have and why were you there?
So the case, one of the cases that I'm working on right now is we have a widower who is a retiree from the union, and between the uh, healthcare services and the funeral costs, wife, he racked up about $35,000 in medical bills, and it's all on the credit card. And
Wow.
he was very interested in finding out a way how he could reduce his debt and have a lower payment. As we're at about traditionally 7% interest rate. I showed him the option through a reverse where he doesn't have to make a mortgage payment, and he was jumping up and down. If he could high five me, in the audience, he would have high fived me. So I could reduce my credit card debt, get rid of it, and not a monthly mortgage payment. Where do I sign?
That's significant, right? So to your point, somebody fixed income and working whether it's the pension or anything else for that matter, but somebody on the fixed income, unexpected debt, medical, healthcare, whatever it is, comes up, 35 grand gets put on a credit card. And in today's world, that's north of 20% if you don't pay that off. So you're reducing a debt, you're eliminating a debt that's at 20 something percent interest, right? And then it goes not only on top of that, so let's call that, I don't even know, 1,200 bucks a month, whatever it is. Or if you take 4% of, I don't even know what the 20% would be. So let's just pretend it's a lot of money each month. And then you get rid of a
Mhm.
mortgage payment. What was he paying on a mortgage payment before you got done working with him? What was his monthly outlay from a mortgage standpoint?
Well, fortunately for this gentleman, he and his wife did manage to pay off their mortgage. So
Good.
they only had the property taxes and the insurance that they were paying out of pocket. But cancer patients rack up a lot of bills, and she unfortunately succumbed to it, and he was left with the bills behind, and to the non-covered expenses plus the funeral cost totaled 35,000. And at 7%, that monthly payment over 15 years would have been somewhere around 700, $800.
Wow. So in other words, in lieu of taking on a debt that would be there that with a 700, $800 monthly obligation, you basically, transfer the debt. Let's call it transferring the debt. I don't want to say, I may have misspoke. I don't want to say eliminating the debt, but you're eliminating the credit card debt, move it over to the reverse mortgage side. And in doing that, you're no longer paying the 20 something percent interest rate on the credit card. And if again, they could, correct me if I'm wrong, Earl, they can pay off the debt if they want to, because this gentleman, he's got 35,000 with $37,000 of debt, move it over to the mortgage side with a reverse mortgage. He doesn't have to pay it. Every month he can literally just wake up and do his normal thing, doesn't have to pay the $800. But if he wanted to, whether it's monthly or at a lump sum, if he gets a lotto scratch off, he's allowed to pay off that mortgage. Is that correct?
That is absolutely correct.
Did out of curiosity, what did you set up? Because I know reverse mortgages have the ability to do like a line of credit, and you can just do kind of like a fixed amount. Which one did you do, and why? What led into that decision on this scenario?
Well, so trying to keep it, what is the right word, compliant here. Uh,
Fair, fair.
John Doe, at 29% interest rate on his credit cards, had an outlay of about $1,200 a month. And as you know, if you make the minimum payments, that balance goes away. So he was drowning. He was drowning in the sorrow of losing his wife and this exorbitant amount on fixed income. We talked about doing a home equity line of credit that encompassed almost an 800 a month payment. When I showed him the reverse mortgage to do the same exact thing, the same ownership rights, and having a non-obligatory payment, he was excited. He said he could live in my house for the rest of my life and I don't have to make that payment. I said, yes, sir. It's absolutely correct. So
Yeah, and
we
so
wiped away.
for those that don't know, I'm sorry to interrupt you, Earl, but I think it's so important to drive on that piece because I know you said it and you need to from a just to drive this home. The reverse mortgages, we've talked about this before. 10 years ago, 5, 10 years ago, they had, call it the 2010s, if you want to call it that, had a bad rap. And people think, oh, they lose their home, the bank's gonna take my home. You know that's not true. I know that's not true. It's a way for somebody in this case to go from what was a life of two and like life was great, all of a sudden $37,000 of credit card debt from medical issues. And then if even to do a forward mortgage, something that we do, right? The Mortgage Mark team does the forwards, and if I said, hey, here's cash out and here's 37 grand, well, that's great. Well, it does eliminate the 29% interest rate debt and pay that off. 1,200, just 100. It's still debt that has an obligation on a forward mortgage, somebody, a normal, air quotes, normal mortgage. Whereas you allow this gentleman to no longer have that obligation that he has to make. There is still a mortgage. So there, I mean, people are like, what's the catch? Well, the catch is the debt still exists. It's just with reverse mortgage obligated to make that payment. So, out of curiosity, so we kind of hit it. I'm sorry I interrupted you before we did it. The line you have the ability to do a line of reverse mortgages. You have the ability, I think, you to correct me if I'm wrong, to do a fixed amount. So in this case, let's say you needed 37,000. When would somebody and it's probably going to answer is probably going to be it depends on the person. Is there an instance where you'd say the 37,000 is just what they did versus a line of credit? Because to me, a line of credit always feels like it's the better option just because it's a good option. I'll say better. A good option because it allows you more flexibility in case life event happens, life event number two comes along. Is what would make somebody take the fixed portion versus the line of credit portion?
So it depends on what needs to be paid off. So in this case, he wanted to pay off the debt. So that as part of this reverse mortgage, we paid off his debt. We did establish a line of credit behind it, earning about 7% interest. And that based upon his equity, he was eligible for another 150,000.
Wow.
That 150 is going to grow at 7% until the next time he needs to use his own money.
That's crazy. So again, I think without saying it, I think the credit for those that are out there exploring these options. I think the important thing that we both agree on is explore options. Know that you have the ability to do one or something in between. You can do a combination of some payment. Maybe it's not the full 800. You can do like all I know is your world on the reverse side, Earl, is incredible. You guys can find. So I think that's the important part we want to drive home today is look, in this instance, somebody had a free and clear mortgage, and that's always fun and great until you need cash. And
Mhm.
$37,000 that comes in that gets put out at 29% interest rate, there's a good reason to suddenly need that cash. And the benefit of the reverse mortgages, Earl, correct me if I'm wrong, we don't is credit score important? Like, dude, how do they qualify for reverse mortgage? Help me. I was about to say it, but I realize I'm not the pro. You are. Does income matter? Does assets matter? The normal credit, income, and assets we look at on the forward side. Tell me about the credit, income, and assets from reverse mortgage qualifying side.
So the answer is yes, yes, and yes, but it is far less stringent than the qualifications on the traditional side. So I only need to have enough money per month to carry the carrying cost of the property. So if the carrying cost of the property, which are electric, gas, um, property taxes, homeowners insurance, that's it. We don't have a principal and interest payment, so we don't need to double up on that amount on a monthly basis, right? So
Mm.
qualifications are most often done on in this case, because we are with the Teamsters Railroad, they do not get Social Security. They pay into their own pension outside of it. So it is a monthly pension payment. That is
Mm,
his only income in this situation. And the qualifications were met easily because he worked 40 years on the railroad and has a terrific pension. But as you can imagine, that credit card debt was taking a significant monthly chunk out of the
mhm.
money he earned over 40 years to retire on. So hopefully I answered all your questions in that one statement.
Yeah, they're necessary. They need to be, they're part of the consideration for the loan, but the reality is it's unlike anything that exists on the forward side. Because to your point, there's no mortgage payment. It obviously makes it a whole lot less of an obligation that you got to, qualify for. So with all that said, Mr. Earl, let me repeat what I think I heard, especially for someone on fixed income, whether it is pension, social, unexpected life event happens, needs access to cash, and allows someone to stay in their home. I mean, this is a really good example of why reverse mortgages can be powerful for the right person, right scenario. Is there anything else that we want to add for closing statements here? Is there anything else that just one more thing you want to tack on to say, man, this is when somebody should reach out and explore mortgages?
Yes, there are two things that absolutely need to be noted. One, the bank never owns your home. And two, you have life rights to the property so long as you live in it.
That's wonderful. Tell you what, if you got time, let's stick around. Let's do a separate video on the life rights and make sure we understand. I don't want to take that here and divert and dilute what we've talked about, but I love that. If you need something, again, the reverse mortgage is my man, Earl Schick, and again, Mortgage Mark here. But I appreciate anybody watching, and if you do need something, reach out. We'll take real good care of you. But Earl, thank you for your time today, and I'll see you in just a second. We're going to talk about the life rights here on the next video.
Thanks, Mark.